Hey guys, I'm back from my work trip and I'm ready to make a lot of videos for you guys, so stay tuned for those. But today we've got a desperately needed video because we're living through a period of time right now where fear and panic has really overtaken not just the stock market, but also the economy. And so I've been receiving a tremendous amount of comments and messages asking me two primary questions. Number one, are we going into a recession? And number two, how can I, meaning me, Ale, how can I be a buyer of stocks during a time like this when the risk of a recession is so incredibly high? Well, in today's video, I'm going to do my absolute best to answer those questions and to also give you the different reasons why I do actually think that the risk of a recession is extremely high right now. In fact, we may have already entered one. I'll give you the reasons why and what analysts are saying about all those things, but I will also explain my rationality on why I still continue to choose to invest in stocks during such a high risk environment. So that should kind of balance out the video from just being kind of like excessively about fear and panic with a little bit more of like long term optimism. And hey, that should make for a pretty interesting video. So I hope you guys enjoy this. Let's go ahead and get started. Hey, what's up everyone? My name is Ale. Welcome back to my world of stocks. Okay, let's go ahead and start with kind of the negative side of things. And in my opinion, it is really clear as day that the risk of a recession has greatly increased over the past couple months, weeks, and even days, as not only our domestic governments and businesses, but of course global ones as well, have been taking drastic measures to stop the spreading of this global issue that we can't really talk about here on YouTube, but of course that can have a very devastating impact on the macroeconomy. In fact, over 75% of the world's economy is only made up by the 20 largest players, and the second largest at over 15% happens to be the country where this whole thing originated. And thanks to the closing of many factories that started over a month ago, it's having a devastating impact on not just their own economy, but also on the global kind of supply chain that the rest of the world relies on. Now, there are reports of not just factories, but also consumer stores finally reopening in the country as rates continue to fall, but much of the damage has already been done as the consumer that was already dealing with a struggling economy well before this new issue was spreading is now strapped for cash, probably because of having to miss work as many were not allowed outside to stop the spread. And the result is that malls like this one in the country have virtually turned into ghost towns, at least according to the New York Times. On top of that, other reports are showing signs of rising inflation and crashing home sales, while February alone saw record low manufacturing for the country that was even worse than the financial crisis. And while the country's premier is now saying that a first quarter contraction is no big deal for their economy, it would actually be the first time they saw one since 1976. So it would definitely hurt the global economy, even if they are in fact able to rebound quickly as we make our way through the year. Still, the rate of new cases seems to be going down there, so a second half of the year rebound is looking very likely. But while rates are falling over there, they are still climbing elsewhere around the world, resulting in countries locking down much of their areas, closing factories and businesses, and in the process likely crashing their economies, at least until the spread gets under control. In fact, economic activity has slowed down so much that satellites are even showing a dramatic drop in pollution in certain areas that are either locked down or experiencing lower travel and activity. Although I should note that some parts of the economy are probably doing very well as grocery stores continue to see unbelievable demand for products. For example, things like toilet paper are running low on store shelves, while bidets are seeing skyrocketing sales. And online toilet paper is selling for literally thousands of dollars in some cases as the panic continues to intensify. And I actually went to the stores this morning because I was just afraid that everybody was gonna like buy everything up and then I would end up needing something and it would be like out of stock. So I decided to go to the store, get a few things. And I went right when the stores were opening. So I went at like 6 in the morning to make sure that I could get some stuff. And I pull up to the store and all the shopping carts were already gone. I literally had to wait for someone to come out of the store, taking their stuff to their car, and I had to go up to them and like, "Hey man, like, could I take your cart and use it?" So then I took the cart, I went inside, and yeah, everybody was just buying everything up. A bunch of shelves were going empty. I spoke to the cashier. The cashier said that they've never seen such high average sale prices or average like cart sizes, which was pretty crazy. So yeah, there's definitely like a lot of panic and fear kind of going around. And I don't want to comment on that too much because the last time that I gave my opinion, I got a lot of people angry at me in the comment section. But I will just say that I'm not totally convinced that all of this kind of panic and stress is going to be helping people, because you have to keep in mind, like when your stress levels go up that much, at least from my understanding, your immune system drops. So that's probably not a good thing to be so stressed out during times like this. It's probably better to kind of try to stay calm and just kind of try to get through it. But of course, everybody should be doing whatever they feel is best to get through these times and to stay healthy and all that kind of stuff. But anyway, I don't want to get deep into that because I probably just got like 100 dislikes just for saying that. But let's transition now to the United States. And here in the United States, a lot of analysts are now predicting that we're headed for a recession. So I want to give my opinion on that. And here in the States, things have been getting progressively worse every single day in terms of like lockdowns and cancellation of events and things like that. And I don't want to sound negative on that. I think that it can have a huge impact on slowing down the spread of this whole issue. So it could be, definitely be a good thing. But it does obviously come at a cost, and that cost is, of course, the economy. Now, so far, over half of our states have already declared a state of E, while Trump has declared a national E as well, to free up tens of billions of dollars in money and resources. And he was also joined by huge companies like Google, Walmart, Target, and CVS, all of which are looking to contribute in their own way to help control the issue. And that was in addition to the ramp up in testing kits being made available and other measures to help treat the issue and the spread of it. I know I'm being vague here, but I have to be for obvious reasons because of YouTube. Anyway, all of this was coming after already outlining plans to cut taxes, support workers with paid sick leave, provide loans to small businesses that need it, and several other similar measures to support not only the worst impacted sectors like travel, but also the broader economy in an effort to minimize the economic impact of this issue as much as possible. And that, coupled with the House of Representatives coming to an agreement with the White House on an aid package from Congress that would provide free tests, sick pay for workers, and bolster food programs, altogether sent the stock market soaring at the end of the trading day. But we'll talk more about that in just a second when we transition over to the stock market. In the meantime, though, everything is essentially shutting down across the country, from schools and universities to large gatherings like sporting events, concerts, conventions, and so on. Even E3, one of the year's largest gaming expositions that I was actually really looking forward to myself, got canceled as well several months ahead of schedule. I think it usually takes place like sometime in June. Anyway, couple all of that with travel bans and everyone too afraid to spend any money on non-essential items that they don't really need, and it's leading to a number of analysts putting out predictions that we are not only headed for a recession, but that we may already be in one. According to JP Morgan, they expect the United States to now see negative GDP growth in the first half of the year. That would be negative growth of 2% in the first quarter and negative 3% in the second quarter, with the Eurozone also seeing negative growth as well, which leads even more credence to the theory that we may be entering a global recession, which they also note in this article from Markets Insider. And they point to the reasons for that being the sudden stop of economic activity, lockdowns, social distancing, cancellations of events, lower consumer spending, and an overall uncertainty level that makes it more difficult to restart the economy, which could lead to further pain down the line, at least according to them. However, I do find it interesting that this entire article refuses to show you everything that JP Morgan said, which, after digging through a few different articles, it turns out that the analysts analyst actually said that not only does he expect the US to rebound to positive growth in the second half of the year, but that an official recession may not even be declared if certain indicators don't reach low enough levels, despite the common definition of a recession being 2 consecutive quarters of negative GDP growth. Anyway, the point is that he expects a general recession in the first half of the year, but then a quick recovery afterwards, with as much as over 2% GDP growth in the third quarter alone if that issue moderates. And with how much everyone is panicking and so many businesses and events are shutting down, I wouldn't be surprised at all if that does end up being the case and the issue does actually moderate. Now, in the meantime, though, there's still this other issue that also popped up out of nowhere and surprised everyone, and that's the new oil price war between two countries that I'll just refer to as Sadia and Rush. And because Rush is now refusing to cut production, Sadia decided to flood the market with even more cheap oil in retaliation, and that, coupled with already extremely low demand for oil because of that other issue that is resulting in factories kind of closing down and much less travel around the world, is in turn resulting in oil prices crashing, which has devastated oil stocks, as those oil producing companies just can't really stay in business selling their oil at such low prices. Now, on the bright side, these type of oil price war issues tend to resolve themselves fairly quickly, since low oil prices don't really benefit any of the countries or the companies involved. And in the meantime, Trump announced that he will be purchasing a ton of this cheap oil for the United States reserves. On top of that, the Fed is basically expected to cut rates down to zero at this point, which should help not only companies refinance their debts, but also consumers with refinancing mortgages and things like that. Although it obviously does hurt anyone that is trying to save money and receive any kind of interest on it. Still, the ultimate result of all of this is a likely recession, and that's why the stock market has been crashing, as it attempts to price in all of this negativity and uncertainty in. In fact, our record-breaking 11-year bull market has now officially ended, as the stock market has crashed straight into a bear market after falling by over 20% from its highs. In fact, the Dow Jones is currently down over 21% from those highs, and that's even after a huge rally on Friday of almost 10%. Now, in my opinion, a lot of that rally on Friday was probably caused by a short squeeze at the end of the day, but either way, the stock market continues to be incredibly volatile, and it would probably be wise to continue expecting huge swings in both directions. But no matter what happens here in the short term, I still hold my belief that over the long term, this horrific period of time that we're going through right now will have proven to be a great buying opportunity for long-term investors like myself. And I know that that does sound kind of insensitive because of everything that's going on. But like I've said in many of my previous videos, I send all of my thoughts and prayers to anybody affected. I wish that we were not going through this issue right now. I wish we could get it under control immediately. I wish it would have never started to begin with. I wish it would have absolutely never happened at all. But the reality of the situation is that it did happen. It is happening. And as stock market investors, we can't help the fact that the stock market is sensitive to these kind of horrific events. And if we're going to be investing our money, we're always going to want the best deals possible. And as stock prices fall, the better kind of value you get back for the price that you pay over the long term. That's just my opinion. Now, as far as this whole recession kind of talk thing goes, look, I'm not someone who likes to make short-term predictions. I'm really bad at it. I'm horrible. I always get it wrong. But if you force me to make any kind of prediction about what's happening here, what's going to happen with this whole recession talk, well, if I look to the so-called experts, they all seem to be pretty confident that we're heading for a recession. And look, things are looking pretty bad, and I'm seeing things get shut down and locked down and all that kind of stuff. I have to imagine that that is going to have a very big impact on the economy. So can we have a recession here in the first half? Absolutely. Okay, so that's kind of what I'm expecting. I always hope for the best, but I try to expect the worst. And so for me, I am expecting a recession here in the first half of this year. Now, you could ask the question, well, then why are you buying stocks? Well, the reason that I'm buying stocks is because I think there's going to be one heck of a recovery coming out of this. And I know it's been kind of thrown around a lot, but I am expecting a V-shaped recovery, a very sharp, this was a sharp fall, and I think it's going to be a sharp recovery. I don't think this is going to be like a multi-year recession or anything like that. I think second half of the year, if things get under control, which I guess does remain to be seen, but I do expect it to get under control because we are taking some extremely drastic measures. I've never seen people panic this much over something like this. In my lifetime, I don't think I've ever seen it. So the drastic measures that we're taking, I expect that to bring us some great results. Oh, like later on, okay? Now, in the meantime, I think that as we increase the availability of testing, we're probably going to see cases go way up because we haven't been really testing for it right now. So cases will probably go way up. You know, we'll probably continue to receive negative headlines. Like I said, I'm expecting the worst. So the stock market may continue to react to those negative headlines. I can't make any prediction. We'll have to see what happens. We'll see how next week goes. We'll see how the next few weeks go, and we'll see what happens. But in my opinion, I think we'll probably continue to see some pretty negative headlines. But as soon as positive headlines start coming out, as soon as this thing comes under control, which I have no idea when that'll be. So I'm not trying to time it. I'm not trying to time the market, time the bottom. But I think the market is not going to care so much about the recession as much as it is about how this thing gets under control. And as soon as this thing starts getting under control, it's going to be positive headline after positive headline after positive headline. And the stock market, in my opinion, I'm not saying factual, just my opinion, it's probably going to just skyrocket because we're doing so much like fiscal like stimulus and policy to prop up the economy right now, to save the economy right now. What happens when these short-term issues go away? And these are absolutely short-term issues. Again, just my opinion. I don't want to say it's factual, but if you think that these are not short-term issues, I don't know what to tell you. Like, it's pretty darn obvious that these are just very short-term issues that will go away. And once these things disappear, and you've been doing all these different things to prop up the economy, that's what the stock market is going to care about, because the stock market tends to be pretty forward looking. So even if we're in a recession, I'm not convinced that the stock market is going to care that much. I think it's going to be looking into the second half of the year, and I think it could take off at any moment. So again, I'm kind of expecting the worst here in the first half of the year. I think things will probably continue to get worse, maybe, and I'll be a buyer of stocks. I'm buying really great companies. I've been buying pretty heavily Visa, it was like my favorite stock to be buying. And but you know, I've also kind of chipped away at some more Amazon. Amazon was in like the 1600 range. I did nibble away at some Amazon. I've also kind of nibbled away at some other stocks, Disney, some great dividend stocks, some AT&T, some 3M. Shoot, I even nibbled away some tiny positions in some travel stocks, and you know, those are heavily impacted. They're gonna have a horrible year, and they're very high risk. So I'm being very careful with those. But a lot of them I do feel are being kind of priced as if they're gonna go out of business. So you know, do whatever you guys feel is best. I'm looking at stocks and I'm picking the ones that I like the most, and I'll make more videos on that. So don't worry, you'll get my opinion on all of that. But in the meantime, I'm expecting things to get worse. I'm expecting prices to continue going down. And I don't want to say hopefully, because that would mean that things are getting worse outside of that. Hopefully things get better outside of that, because, you know, I'm concerned for people. But in terms of the stock market, prices going down is not a bad thing for me. It just gives me more value for the price that I pay. So if things continue to get worse and go down, I will probably continue to buy stocks. And then coming off of that, I think we're going to have one heck of a recovery. And I think I'm going to be very happy with my decision to have been buying stocks during all of this kind of madness and everything that's going on. So anyway, those are just my opinions. Always do your own research, guys. Make your own decisions. I'm just sharing my opinion. But let me know what you guys think down below in the comment section. I'll try to read and respond to as many as I can. And thank you guys for watching. Thank you for all the support. I really appreciate it. More videos coming for you guys. And I will catch you in the next one. Don't forget to hit the like button. Really helps the channel. I'll see you guys later. Bye-bye.